Thank you very much for the introduction, Gary, and also to IAG for inviting me along today to the Virtual Roadside Academy. As Gary said, I'm Mike Walters, Managing Consultant with Elevenci. And in my presentation today, what I'm going to try and do is spend the next sort of 30 minutes covering transformational themes in the automotive industry and the impact of C-19 in terms of perhaps immediate and longer term impacts on the existing themes. It's going to be a fairly whistle-stop tour. I've only got 30 minutes to cover quite a large area of scope, so I will try and leave some time for questions at the end. Okay, so let's start off. Sorry, just move to the next screen. Okay, let's start off by moving back to the start of 2020 in the pre-C-19 world. I think it's fair to say, without being cliched, that the industry was experiencing a perfect storm of disruption and transformation. What do I mean by that? I think what we saw was we had an industry where multiple diverse transformational themes and challenges were crystallizing at the same time and really putting an incredible pressure on our industry, not just the OEMs, but also the finance companies, the fleet organizations, the mobility providers, and the wider supply chain. I think it's fair to say that realistically, many organizations were almost having to reinvent themselves to survive. Obviously, as an industry, automotive doesn't operate in a vacuum, and what a lot of the changes that I'm going to sort of talk about today really were being driven by emerging technologies and innovation in the wider world. So, for example, things like blockchain, virtual reality, deep learning, cloud computing were all serving to transform and accelerate the pace of change in the wider auto industry. I'm going to pick on a few of the particular themes that you can see on the slide in front of you. First of all, looking at the environmental agenda shaping and changing the industry. As we all recognize, there's a widespread and growing societal desire to address global warming, to address nitrous oxides, reduce particulate emissions, and this had resulted in obviously pressures on the internal combustion engine, particularly diesel, and this was really driving the rise of electrification and alternative drivetrains, which was very evident at the beginning of the year. And obviously the environmental agenda was also driving wider initiatives. So, for example, we'd seen the desire to introduce clean air zones in multiple cities and urban centres across Europe and the wider world. And also, as I'll talk about later, I think what we could see was that the environmental agenda was very much driving the movement to mobility and automation services. Earlier in the year, we also had the introduction of the EU's European emission legislation. This was a significant concern and challenge to the OEMs, with the spectre of possible huge financial penalties if they weren't able to reduce the CO2 emissions. Again, this was leading to an acceleration in the movement to electric vehicles, very much pushing the manufacturers to improve the sales of hybrid, plug-in hybrid and pure electric vehicles, and also a wider challenge for them to reduce the number of high CO2 emitting vehicles within their range. Another fundamental characteristic of the industry in terms of disruption was the challenge of multiple diverse and new entrants and disruptors into the marketplace. So we all obviously know about Tesla, who were very much accelerating production towards the end of 2019 and increasing their market share in specific markets. But the OEMs were also facing significant additional challenges from additional electric vehicle OEMs such as Geely, Polestar, and behind the scenes we have multiple startups such as Rivian, Lucid, NIO, and Arrival in both cars and HGVs, LCVs, who were starting to sort of penetrate into the marketplace. And we also had a second fundamental challenge to the existing OEMs, with the planned arrival in the European market of multiple Chinese manufacturers during 2020 and 21. So organizations such as Lynk & Co, Bike, Byton, etc., all with very aggressive growth plans. And in the mobility and autonomy space, we also had organizations such as Waymo, Cruise, NVIDIA, Uber, all with substantial plans around connectivity and increases in autonomy. Looking at market conditions early in the year, pre-C19, we also had falling international sales in many markets. We had the Chinese market down over 8% in 2019. And this pattern was repeated in many other markets due to legislation and specific national reasons. For example, in the UK, we had the challenges of Brexit, which was fundamentally impacting the volume of vehicles being sold. We also had the impact of WLTP regulations, which had impacted the supply chain. And generally, we had other trends in the marketplace that were really serving to shape and direct the transformation that's evident on this slide. So, for example, the move to usership, away from ownership, the rise of subscription. These are all key themes. And we also experienced the ongoing issues from Dieselgate with the continuing pressures on diesel sales. Okay, what I want to do now is take a little bit of a deeper dive into some of these key themes and give a little bit more context and information. So, pre-C19, we had increasement investment and mobility. Now, mobility to me is very much a generic title. It means different things to different people. It encompasses a whole host of services, connected vehicles, car sharing, ride hailing, multimodal transport. But as we look towards, earlier in the year, there was significant investment in both corporate and public mobility initiatives on an international basis. That included, governments, cities, national transport organizations, all launching mobility. And a real key constituent of the mobility marketplace was mobility as service MaaS, which obviously relates to the digital platforms and components that allow people to access a range of public and corporate initiatives and to do travel planning and fulfillment, booking, etc. Mobility pre-C19 was an extremely vibrant, dynamic ecosystem. We had mobility driving strategic OEM alliances, for example, the likes of BMW and Daimler, investing more than £1 billion into mobility services and therefore looking to share the costs. And interestingly as well, we had fundamental changes with, for example, rental companies like Europcar rebranding as Europcar Mobility. We had the OEMs increasingly entering the mobility space with the likes of Toyota Kinto, and the international full service leasing organizations, people like ALD and Alphabet Group, moving away from positioning themselves as fleet organizations and stressing that they were mobility providers. And I think most interestingly is we had an absolute bewildering proliferation of mobility as a service providers in terms of fintechs that were in this space. I mean, the number of providers is incredible. And in addition, we had larger organizations such as DiDi and Gojek in the Far East who were scaling up as major players in this marketplace. Okay, still in this pre-C19 world, as I mentioned, we had the acceleration of the transition to hybrid, electric and alternative drivetrains. The movement away from diesel and to a lesser extent petrol was accelerating. 2020 was increasingly being viewed as the year of the electric car. Already we'd had major EV launches from multiple manufacturers, for example, Mini, Honda, Peugeot, and we had planned launches from Volkswagen with the ID.3 and Ford with the Mustang. Behind the scenes as well, I think it's interesting to flag the continued investment in hydrogen technologies by organizations such as Hyundai and Toyota, potentially as a longer term alternative drivetrain, particularly in larger vehicles and HGVs and LCVs. And again, the transition was obviously involving major manufacturer investment, including strategic alliances that were being formed between Volkswagen and Ford, Ford and Rivian, BMW and JLR, etc. Electrification was also bringing to the fore the challenge of battery supply, which was a constraint on manufacturing. And it was also acting as a catalyst for, the challenges of deploying an effective infrastructure for charging in national markets, and the capability of the underlying national infrastructure in terms of the grids to support the rise in vehicles. And very interestingly as well, it was also at a time where we started to see the energy companies and some of the oil companies moving in to this particular sector, as evidenced very recently. I don't know if anybody saw it in the news over in the last few days, where you have Lotus looking to establish a relationship with an energy provider. Okay, moving forward into the key theme of the transformation of auto retailing and networks and the rise of digital. We were experiencing at the beginning of the year significant OEM network reductions and restructurings in many markets. So, for example, in the UK, both Ford and Honda was fundamentally restructuring and reducing the volume and nature of the retail network. We had the OEMs and dealer groups really facing that challenge of defining the future retail model, the move away from bricks and mortar. How will they actually be structured in the future digital world? And really all this was against the backdrop of, low profitability in new vehicle sales and an over reliance on after sales and parts for dealer revenue. At the same time, we had the OEMs increasingly trying to increase the direct digital facilities, though in many instances this was having low take-up. And the OEMs also trying to move away maybe from the traditional retail dealership. Some interesting introductions by the likes of Lynk & Co, DS, Polestar, etc., with retail spaces rather than dealerships, pop-up stores, introduction of urban centres, all really trying to address a retail model for the future. We had some interesting application of technology as well. The use of virtual reality and augmented reality was increasingly being used to try and improve the ability for people to specify and configure vehicles in the dealership or remotely. And that was quite an interesting element of applying technology in the dealer space. Dealers also face the challenges of new entrants in many markets, disruptors, for example, Kazoo, moving into the online used vehicle market space. And dealers were faced with the challenge of electrification, as I've mentioned, the investment in infrastructure, replacing the revenue that was going to be potentially lost long term due to the lower complexity, lower servicing and consumable spend associated with electric vehicles. Okay, another key theme, and a particularly interesting theme to me, was around the early adoption of automation, robotics and AI. So if we look back to the beginning of the year, we were at a point where this was now moving beyond the manufacturing space into the wider auto finance world, particularly where we were starting to see the adoption of sophisticated chatbots, robotic process automation, machine learning, advanced workflow. All these tools were starting to be deployed in meaningful projects. So the use of robotic process automation to automate, traditional high volume manual tasks like data entry, customer processing, transaction processing, and perhaps more interesting, the application of AI and deep learning to such areas as credit decisioning, customer retention, and the wider behavioral analysis, which is an important element of improving efficiency and customer experience in finance organizations. Final couple of themes before I move on to the C19 world. We had continued research and development in connectivity and autonomy. I think it was really clear that increasingly the predicted timescales for full autonomy had been hugely optimistic. The start of 2020, we were already in a position where the early promises of stage 3 and full autonomy stage 4 and 5 were slipping back significantly. The OEMs were announcing that due to the complexity, the high cost, really the difficulty of delivering this technology, that instead of moving forward and aiming for level 4 and 5, there was more a focus on delivering level 2 and 3 in terms of driver aids. Though I think it's fair to say we also had, the major disruptors such as Cruise, Waymo, Uber, who behind the scenes continue to progress the full journey to full autonomy and continue to make investments in this area. Though again, I think as we'll talk about with C19, this may have been impacted in terms of them having to progress in a more virtual way. Okay, and really the final thing that I want to cover was we had significant industry consolidation and convergence driven by many factors, for example, the cost of electrification, the high cost of technology. We saw, for example, the PSA and FCA merger. We'd had the previous PSA group take over of GM's European operations. And interestingly, we had the OEMs looking to add rental and mobility capabilities onto their existing business models. So examples of that included Toyota through its mobility brand Kinto, purchasing a fleet management company called Inchcape. And also recently we've had the announcement of Hyundai Capital purchasing Sixt Leasing as part of bringing that leasing capability and mobility capability into the existing auto finance business. Okay, I want to take a little pause for a second and really just move to a second area that I think is important to consider when we look at the wider automotive industry, and really that's the structural and operational deficiencies that we as Elevenchi still believe characterize the industry and continue to be a potential barrier in terms of agility and transformation moving forward. So what do I mean by that? So for example, traditionally OEMs, auto finance and leasing has been organized as quite a segmented, siloed business. These organizations have been run very separately. Many of the business models in these organizations are structured around historic models. For example, many are designed around the specific support of particular finance products or particular customer segments and not really harmonized. I've mentioned earlier some elements of harmonization, but realistically, we as Elevenchi view that there's still significant overlap, duplication, and really opportunities for harmonization and a more holistic approach. A good example to bring this to life a little bit more, if you look at some of the initiatives within OEMs and auto finance companies around mobility, you get many disparate groups, functions and project teams working in different silos progressing mobility. So we have the OEMs moving that forward, but you may have a parallel team or project in the leasing, which it just leads to a fragmentation and an inefficiency. And in summary, I think really one of the challenges is how the industry moves forward and structures itself in a more harmonized, holistic way, which allows a better support of the challenges ahead. Okay, so really that section was very much talking around the pre-C19 world, and we're now at a point where many of us are coming out of lockdown in our respective countries, and we're starting to see the first positive signs of the future in terms of the ability to go out, and also we've got the point now where manufacturers are starting to restart production. The OEMs are now starting to restart their dealer networks. So I just wanted to give a quick summary from an Eleventy perspective as to some thoughts around C19. So first of all, I think it's important to highlight that this is very different. It's something very, very new. Public health is a trigger. It's not driven by financial or economic matters. It's not a liquidity crisis. Potentially, comparing this with 2008, markets were relatively well positioned before the start of C19. We're still at a very early stage. I think that's a very important point. It's probably only the end of the beginning rather than the beginning of the end. The speed and timescales for recovery are very hard to define. And I think it's probably fair to say that the new normal is still a long distance away. But what that means as we start to see the first, positive signs of a return to a degree of normality is that we view this as a real opportunity in the immediate weeks and months for a stop and check. It's almost a gateway in project terms. And really, organizations need to review their strategies, roadmaps, and change portfolios, because increasingly every penny is going to count going forward. And therefore, looking at existing mobility initiatives, looking at existing digital, it's very much a case of revisiting, looking at the priorities and the return on investment. I think importantly as well, some of the trends that I previously talked about, there's going to be an acceleration of some of these trends. There's going to be a retardation of some of these trends or a modification. And that's what I want to just do in this sort of final section of my presentation is to go back to some of the previous trends that we talked about and just look at them in the context of what we see as the immediate and potentially longer term. I'm going to pick out 3 trends because I've only got a certain amount of time. But I'll start off by looking at auto retailing and networks. So if we look at, I've talked about the pre-crisis position, but if we look at the initial C19 impacts that have been happening over the last few months, we've had obviously massive falls in international auto sales across multiple markets. UK is down 97%, France, I believe, is down 88%, Italy 97%, massive unprecedented reductions. This has presented severe liquidity issues for many dealers. We have the challenge of used car stocks aging on dealer premises. The OEMs have had, variable support mechanisms, for example, extensions and support for wholesale stocking to try and support the dealers. And the dealerships have run skeleton operations to support essential user surfacing in many markets. And interestingly, there's also been a rush to try and accelerate and promote existing digital channels and contactless end-to-end processes, the ability to deliver vehicles, test drives without, customers having to actually physically go into a dealership. So our perspective from an immediate outlook is that we believe car buyers will not flock back to dealerships. It will take some time. There's going to be significant pressures on dealers to rapidly clear the stocks that, are now 2 to 3 months older. There's going to be significant pricing volatility in both used and new car pricing, as there's a desperate desire to move used vehicles and to incentivize, for example, electric vehicle sales. Maybe there'll be international or national government support and stimulus, for example, scrappage schemes linked to emissions criteria. And potentially we're going to see other things. We're going to see, for example, spikes in after-sales activity in dealerships as everybody, takes their vehicle in for servicing and testing. And the economic impact, in terms of debt and people's uncertainty may lead to, a sustained weaker customer and fleet demand. In the longer term, we think that auto retailing and networks is going to be shaped in terms of OEMs continuing to reduce and restructure their networks. There'll be increased dealer group consolidation. So, for example, in the UK and certain European markets, we're already seeing some of those large dealer groups look to gain synergies by combining. There's going to be continued profitability challenges in dealerships, which are going to be accelerated by the EV impact I mentioned earlier. Continued focus on after sales and used car retailing as a profit source. And we believe that there'll be an increased acceleration of digital from both new players and OEMs, strengthening and adding sophistication to the end-to-end online sales process. The continued adoption of new retail formats, for example, virtual reality, the use of webcams, etc., we think will increase. And more fundamentally, we're going to get the changes potentially in the OEM dealer relationships, introduction of more agency style models and direct models, as evidenced by new entrants, for example, Link & Co, who are coming with a very much a direct to consumer, direct to business without retailers being included in the model. Okay, just moving on to mobility and mobility as a service. I've talked about the pre-crisis. In terms of initial C19 impacts, well, obviously the immediate demand for many mobility services has really been halted. Car sharing has gone away. Public transport usage has declined and plummeted over the last few months, except for essential users. The OEMs, the mobility providers have been focused on surviving the immediate crisis with other priorities. And the funding and the capital source for many mass innovators and fintechs has in many cases been reduced or fundamentally stopped due to the concerns and the economic pressures. And a lot of initiatives have been put on hold and delayed or deferred. So in terms of an immediate outlook, what do we think in terms of mobility? We believe that there'll be potentially a lasting societal impact in that people may, look to avoid public transport and sharing in the immediate future. That's a question. It's probably going to negatively impact the justification and business case of many public and corporate initiatives. There'll be a widespread deferment. As I mentioned earlier, it's a natural checkpoint. For example, the OEMs who had aggressive plans for the rollout of various mobility and subscription services will potentially defer quite a lot of these initiatives or revisit them in terms of the rollout plans. And I think an important point is that we're likely to get further consolidation and casualties in that very complex mobility as a service fintech space. In the longer term, however, we think that the demand for mobility and mobility as a service will return. The long-term strategy, the direction, the societal desire is robust and will stand up. Maybe health and safety will increasingly be a key measure within that, as a legacy of C19. We believe there'll be continued innovation, for example, wider extensions of the multimodal aspect of mobility. And as we've already seen pre-C19, we started to get consolidation and harmonization in terms of the mobility platforms and the technology, which is just a natural evolution in an industry like this. And as I've mentioned, I think the OEMs will continue to reposition themselves as mobility providers. And people like Toyota with Kinto will go forward, but perhaps in a slightly different way. And I believe that mobility is a strong accelerant for the removal of silos that we mentioned in terms of the structural challenges. So it'll help to bring OEM, retail, and fleet close together naturally through the introduction of mobility services. Okay, I think I'm coming up to about 23 minutes. So a couple of last slides to finish off. In terms of digital, just looking at the immediate outlook, we believe that there'll be an acceleration in digital innovation. We also think direct consumer digital sales volumes, both new and used, will rise significantly at the expense of traditional bricks and mortars. The innovation in the supply chain around providing a contactless customer experience and service will be accelerated in terms of, as I've mentioned, test drives, deliveries, other contact points. And the finance companies who've previously had various apps and portals to service their customers and dealers, we think there'll be quite an acceleration of initiatives in that digital space. Longer term, digital, there'll be increased incorporation of automation and AI and robotics, as I've mentioned, to bring efficiency, behavioral and analytical benefits. There'll be a drive to digital simplification and aggregation. I mean, it's a very complex world in terms of touch points for dealers and customers with OEMs and finance companies. There's a real opportunity for sort of simplifying and reducing the number of touch points. Final couple of points. I think there'll be the industry disruption will continue for new entrants, and contactless will potentially be one of the enduring outcomes that comes out of the C-19 crisis. Okay, so as a final slide, I just want to give some sort of summarized final thoughts and takeaways for you as an audience. So, you know, we as Eleventy think that C-19 has been you know, extremely disruptive and, you know, significant event, which, you know, has exposed some of the inefficiencies and structural issues in the industry, e.g. the silos, some of the deficiencies of the retail model and the digital maturity. We also believe that the new normal, it's just too early to define it. But we do think that some of the existing key themes will survive and prosper. For example, mobility and digital, and the C-19 will be a catalyst for innovation and rapid change. We also think C-19 will really accelerate automation in terms of the adoption of robotics, AI, and some of the solutions that I've mentioned earlier. Probably be an accelerant of that particular theme. If we look at the autonomy space, however, we believe that OEMs will maybe defer or decelerate plans due to the high cost of investment and long timeline, and you know, maybe that will, you know, result in 5 years plus delays, and increased focus on delivering level 3 autonomy rather than the sort of full autonomy of level 4 and 5 that had been the previous target. And finally, we think that, you know, electrification will power forward with electric and longer term hydrogen. Significantly, it's increasing its market share, which obviously is critical to the OEMs. And finally, this has really been a stress test of the automotive industry, and you know, we think that the C-suite within most organizations will be now carrying out a retrospective, you know, in terms of how their organizations perform. Did our platform stand up to the test? And it will really accelerate the clear out of restrictive legacy IT platforms and put an increasing focus on agility and resilience as key elements for organizations to consider in the future. Okay, so really that's it from me. I think the final thing really as a takeaway is for you as a rescue and roadside assistance ecosystem to consider how these evolving themes will impact and shape your world. And I'll leave that for you guys to consider. And thank you again for the opportunity to speak to you today. Thank you.